Good afternoon, ladies and gentlemen. It's indeed a privilege and pleasure being in front of such a august gathering. Thank you. Before I start my presentation, I would like to set the context and begin by saying India today is on the mind of every global investor, be it a foreigner, be it an NRI, be it an individual, be it an institutional investor. They all want to participate in India growth story. Thanks to our last decade of political stability, thanks to the interest rate differential structurally narrowing what used to be a 500 bips for a 10-year US Treasury and a 10-year India GSEC has now narrowed down to as low as 250 to just 275 bips. And of course, slowing of rupee depreciation. Before 2014, it was almost given that rupee will depreciate annually every year against the US dollar by 5%. In the last 10 years, Indian rupee has depreciated just by about 3 to 3.5% over the last 10 years. And I'm quite confident with the layout that we have today, the rupee depreciation will even further slow down to just about 200 to 250 bips in line with the interest rate differential. Now that the foreigners and the NRIs are looking to participate and they would like to generally invest in dollar-based funds, but would like to invest in Indian capital markets, Indian equities, the underlying being there, we present to you MK Bharat Fund. This is a fund which is where the NRIs can invest, foreigners can invest. The minimum investment size for every individual investor or every portfolio has to be about 100,000 US dollars. The only condition is that our neighboring countries, our friends from there cannot invest in these funds. The citizens of Pakistan and China are not allowed to invest in these funds. The structure of the fund goes like this. I'll try to simplify this. This is a fund domiciled in Mauritius. This is a VCC fund, variable capital company. This is the first of its kind from Mauritius. Mauritius is generally known for the PCC structure, the protected cell company. Variable capital company has most likely been a Singapore structure, a much more expensive structure, but a very foolproof structure. We are among the first ones to get this VCC structure from Mauritius. Mauritius has very recently introduced the structure. As you can see here, that every fund is very separately registered with SEBI as a foreign portfolio investor. We have registered 3 funds over here for our 3 key strategies. MK Capital Builder, which is a flagship product, which is a multi-cap, flexi-cap product with a more than 12-year track record now. MK Bharat Fund NV, which is a manufacturing focused fund, and Bharat's Golden Decade Fund, which invest in futuristic themes like AI, digitization, consumerism, and manufacturing. The other big advantage of this fund is that these funds are registered with US SEC, with UK authorities and also Singapore. So the investors from these domiciles can actually claim the tax benefits. We also give them K1 certificates, particularly for the US guys, so that they can actually claim the tax benefits over there. Just a little bit more on the PCC and the VCC. As you can see from the structure here, under the PCC there is only one fund, and within that fund you have multiple partitions. Whereas under a VCC fund, the variable capital company, every fund is a separate fund registered with SEBI as a foreign portfolio investor. Every fund will have its own custodian. Every fund will have its own demat account. So there is absolutely no risk of commingling, which is one of the biggest challenges with some of the foreign funds. So we have very carefully, although it's a little expensive structure, but in the larger interest and in the long-term strategy, we believe that VCC is the way ahead, and that is why we've selected this fund. This fund is domiciled in Mauritius.
there are typically 3 or 4 places where the foreign funds come from: Mauritius, Gift City, Singapore. Largely, most of the characteristics are same, just that from a Gift City, the minimum investment size goes to $150,000, whereas from Singapore, it's $100,000, and Mauritius also it's $100,000. The Singapore regulations are much more stricter, and it's a much more expensive place. So the cost of running the business or running the fund becomes a little more expensive. Mauritius is a good middle way of getting the funds to India. It is also a very easy way of doing an account opening. It has very simple processes. You don't need too many documentations, unlike as some of you might have operated with a NRI PIS account in India. Opening a PIS bank account, operating it is a fairly tedious process. Whereas if you look at the way the account opening happens in Mauritius, it's a very, very simple process. You don't need too many documentations. And you also have the option of, if you have some trust, your partnership firms in the foreign countries, they can also actually open their accounts. So we have this fund here. Coming to our MK Bharat Fund, some bit about that. At MK Investment Managers, for the last 12, 13 years that I have been here, we have been extremely, extremely conscious about the quality of our portfolio. And when I talk about the quality of our portfolio, it is very important to say that the management quality is absolutely pristine. But management quality is a fairly subjective thing. To get this subjectivity out and to make it an objective exercise, we created this proprietary module called Equal nearly 12 to 13 years back. This is one of its kind to very clearly evaluate management, and we evaluate management on 5 key parameters: management integrity, management capability, wealth distribution to minority shareholders, investor communication, and liquidity. Each of these parameters are then subdivided into very, very objectively evaluated data points, and these are all publicly available data points so that there is an apple-to-apple comparison across companies. For example, in the management integrity, we evaluate multiple parameters, whether the promoter holding is high or low. Higher the promoter holding, lower the probability they will do something silly. Investing is a game of probability, and that is what this model is based on. Has the promoter been increasing or decreasing their holding? As long as they are increasing their holding, we give them positive marks. Whenever they are decreasing their holding, we give them negative marks. Who are the auditors for the company? Are they among the big 4, known or unknown? Have the promoter's salary been significantly higher to the profits? Or, sometimes in case of multinational companies, is the royalty also a very high amount? That also leads to compromise of minority shareholders' interest. We have seen many examples where promoter shareholding pledged has also compromised minority shareholders' interest. If you see from the days of Satyam to as recent as probably Z, wherever promoter shareholding interest has been significantly higher, has been pledged significantly higher, minority shareholders' interest has been compromised. We also have certain red flags where we believe that wherever promoter shareholding is more than 70% pledge, we would like to avoid investing in those businesses. Wherever the debt equity ratio is more than 2.5 times, we would like to avoid investing in those companies. Wherever there is a large acquisition, and what is a large acquisition? If it's more than 50% of your current balance sheet size, we would like to avoid investing in those businesses. We have seen, just to give you some examples, some of the best of the companies with best of the financial wherewithalness have not been able to take the acquisition very well. For example, if you see Tata Motors acquiring JLR, Tata Steel acquiring Chorus, Bharti acquiring African business, Sun Pharma acquiring Ranbaxy, all these acquisitions had pushed back these companies by at least 3 to 5 years. So, we strongly believe that management quality is of utmost importance when we are trying to do long-term investing and wealth creation for investors. We have three key products, as I mentioned earlier: MK Capital Builder, MK NV, and MK Golden Decade. We have become fairly platform agnostic. All these products are available under PMS, AIF, and also an offshore dollar denominated fund. This has been our track record. As you can see here, MK Capital Builder is a multi-cap, flexi-cap portfolio which has a 12-year track record. We've delivered nearly 18% compounded returns in rupee terms. In dollar terms, almost 13.5% compounded return, beating all the benchmarks across the board. And in fact, our risk-adjusted returns have also been very, very superior over this period. Our MKNV, which is focused on the manufacturing sector, has more than 2-year track record now, has been one of the best performing PMS strategies. And we launched this manufacturing much before most of the street was thinking about it. We've delivered a return upwards of 30%, or in fact 34% compounded in rupee terms and 30% compounded in the dollar terms. Our latest baby has been doing fantastic. India's Golden Decade and Bharat's Golden Decade Fund, it has delivered nearly 40% return in the last 12 months. Just to share with you some bit about our team, MK is a group which is more than a 3-decade-old firm, started by two first-generation entrepreneurs, Mr. Krishna Kumar Karwa and Mr. Prakash Kacholia, both of them chartered accountants. They started this business as an equity broking business focused on the institutional broking, and over the period, they also established MK Investment Managers, which is where I am part of it for the last 13 years. I have my colleague, Mr. Manish Sonthalia, who's more than 30 years of experience in the Indian equity markets, my head of research, and also a co-fund manager, Mr. Kashyap Javeri, who has been a lead banking and financial services analyst, institutional analyst, and he's been with MK also for more than 15 years now. And Mr. Nagesh Pai, I'm sure most of you heard him today morning, who's heading our sales. That's it from my side. Thank you, ladies and gentlemen, for your patient hearing.
Thank you so much, sir, for such a wonderful presentation. It was well on time again and with a lot of data points to understand. I would request Deepak sir to please come on the stage and present the memento to sir.